When someone says, bond yields are rising, do you really know what that means or how to respond in English? Maybe you've heard terms like treasury yield, credit spreads, or interest rate hikes, but don't know how to talk about them naturally. Today, I'll show you 8 sentence patterns to sound professional when talking about bonds, interest rates, and market outlooks, even if English isn't your first language. Welcome back to English with Bruce, where we turn your real-world business experience into fluent global communication. Like, subscribe, and hit that notification bell so you don't miss next week's advanced finance English lesson. Let's talk about the bond market. 1. Asking about interest rate movements, patterns. Rates have risen, edged higher, increased due to fact, data point. Rates have stayed unchanged, steady, despite fact, data point. Use the patterns like this. Rates have edged higher due to stronger than expected economic growth. Rates have stayed steady despite market expectations of a hike. 2. Describing yield movements, patterns. Bond yields are rising, falling, steady because of fact, data point. The 10-year Treasury yield hit number percent for the first time since year. Use the patterns like this. Bond yields are falling because of expectations of a Fed rate cut. The 10-year Treasury yield hit 4.7% for the first time since 2009. 3. Talking about bond prices, patterns. There's an inverse relationship between factor A and factor B. Asset or variable are negatively correlated with other variable. Use the patterns like this. There's an inverse relationship between bond prices and yields. Bond prices are negatively correlated with yields. 4. Discussing central bank policy, patterns. The central bank decided to raise, hold, cut interest rates steady. Group or market are expecting the central bank to make specific economic event or action, time frame, or period. Use the patterns like this. The central bank decided to hold interest rates steady. Traders are expecting the central bank to raise rates again next quarter. 5. Talking about credit risk or ratings, patterns. Country's credit rating was upgraded, downgraded, affirmed by agency. Investors are concerned about company's debt level due to its reason. Use the patterns like this. South Korea's credit rating was upgraded by Moody's. Investors are concerned about Meta's debt levels due to its aggressive AI investments. 6. Comparing corporate and government bonds, patterns. Type of financial asset A usually offers comparative adjective plus noun than type of financial asset B. Use the pattern like this. Corporate bonds usually offer higher yields than government bonds. 7. Explaining market reactions, patterns. The bond market reacted positively, negatively to the data. Yields jumped after the recent jobs report. Use the patterns like this. The bond market reacted negatively to the latest CPI data. Yields jumped after the stronger than expected jobs report. 8. Making predictions or outlook statements, patterns. I expect yields to rise, fall, stabilize over the next few months. Rates will likely remain high, low until inflation cools. Use the patterns like this. I expect yields to stabilize over the next few months. Rates will likely remain high until inflation cools. When you talk about the bond market, focus on these 4 areas. 1. Yield and prices. 2. Central bank policy. 3. Credit risk. And 4. Market outlook. Use these 8 patterns and you'll sound like a financial professional and not just a learner reading from a textbook. If this lesson helped you sound more confident when discussing interest rates or bonds, hit like, subscribe, and hit that bell. Next Wednesday, we'll cover how to talk about inflation and economic indicators, the language every global professional needs. This is Bruce, helping you sound global, competent, and financially fluent. See you next time.